Good afternoon, members of the press. The Monetary Policy Committee, MPC, of the Central Bank of Nigeria, CBN, held its 305th meeting on May 19th and 2026. The committee reviewed recent developments in the global and domestic economies and assessed the near to medium-term outlook. 11 members of the committee were in attendance. Decisions of the MPC. The committee's decisions are as follows. 1, retain the monetary policy rate at 26.5%. 2, retain the standing facilities corridor around the MPR at plus 50 to minus 450 basis points. 3, retain the cash reserve requirement, CRR, for deposit money banks at 45%, merchant banks at 16%, and for non-TSA public sector deposits at 75%. The decisions of the MPC were anchored on a comprehensive assessment of risks to the outlook. Although inflation has risen marginally for 2 consecutive months, largely induced by external shocks, the MPC recognized its transitory nature and remained confident that the current macroeconomic environment is sufficiently robust to support a return to disinflation. Considerations. In reaching its decisions, the MPC particularly noted the spillovers from the Middle East crisis, which have exerted upward pressure on energy prices, costs of transportation, and however, available evidence indicates that the impact of the crisis on the Nigerian economy has been largely muted due to the benefits of prior policy reforms. These include exchange rate stability, improvements in external reserve buffers, strengthened monetary policy transmission, well-capitalized banking system, and ongoing fiscal consolidation, which have significantly bolstered the economy's ability to absorb external shocks. As a result, the pass-through of global commodity and energy price shocks to domestic inflation has been significantly mitigated and would have been more pronounced in the absence of these reforms. The MPC was, therefore, convinced that the essential conditions for price stability remain firmly in place. In addition, the committee welcomed the recent sovereign rating upgrade amid prevailing external headwinds. This further underscores the strength of the country's macroeconomic fundamentals and reinforces confidence in its reform trajectory. Members were, therefore, of the view that a cautious and vigilant policy stance is necessary to anchor inflation expectations and safeguard macroeconomic stability. The MPC also noted with satisfaction the successful conclusion of the banking recapitalization exercise, which culminated in the emergence of 33 banks with stronger financial soundness indicators, enhancing their capacity to support the economy. It urged the bank to remain proactive and adopt necessary measures to address potential post-recapitalization risks towards preserving financial system stability. Price and other domestic developments. Headline inflation year-on-year rose marginally for the second consecutive month to 15.69% in April 2026 from 15.38% in the preceding month, largely driven by an increase in the food component. Food inflation rose to 16.06% in April 2026 from 14.31% in March, reflecting the high cost of transportation and other logistics factors. Rated to 15.86% in April 2026 from 16.21% in March. Similarly, the 12-month average inflation slowed to 19.16% in April 2026 from 20.05% in March, marking the 6th month of consecutive decline. Month on month, headline inflation also eased to 2.13% in April 2026, compared with 4.18% in March 2026, reflecting moderation in both food and core components. Real GDP grew by 4.0% in the fourth quarter of 2025, compared with 3.98% in the preceding quarter, supported by expansion in industry and agriculture sectors. The non-oil sector grew by 3.99% year-on-year in fourth quarter 2025 from 3.91% in the preceding quarter, driven by key activities in the services sector, including information and communication and transportation and storage activities. Growth in the oil sector also increased to 6.79% in the fourth quarter of 2025 from 5.84% in the previous quarter on the back of improved refining in the downstream sector. Gross external reserve remained robust at $49.49 billion as of 15th of May 2026, compared with $48.35 billion at end of March 2026, sufficient to cover 9.04 months of imports for goods and services. This strong buffer continues to reinforce investor confidence in the Nigerian economy and support exchange rate stability. Global developments. Global growth is expected to moderate in 2026 compared with 2025, reflecting the impact of heightened geopolitical tensions, energy market disruptions, and tighter financial conditions. Global inflation is anticipated to edge higher in the near term, driven by elevated energy and agricultural commodity prices, as well as supply chain disruptions. In some advanced economies, persistent core inflation is moderating the pace of disinflation. Similarly, exchange rate pressures in several emerging market economies are expected to sustain elevated price levels in the near to medium term. Consequently, most central banks have embarked on a cautious data-driven approach, broadly pausing or slowing monetary easing to address inflationary pressures. Outlook growth is expected to remain resilient in 2026, despite emerging downside risks associated with the Middle East conflict. Available projections indicate a moderate increase in inflation in the near term. However, the combined effects of previous policy tightening, exchange rate stability, and enhanced food supply are expected to support the return to disinflation. In the light of evolving domestic and global uncertainties, the committee reaffirmed its commitment to a forward-looking and evidence-based policy framework anchored on its primary mandate of achieving price stability while preserving the soundness and resilience of the financial system. The next meeting of the committee is scheduled for Monday 20th and Tuesday 21st July 2026. Thank you.
Thank you, Mr. Governor. That was communique number 162, presented by the chairman of the MPC and the governor of the Central Bank of Nigeria, Mr. Ulayemi Adisu. As usual, we'll take questions from members of the press. Please state your name, your medium, and then ask your question. You are entitled to just a question. Thank you.
Good afternoon, everyone. Good afternoon, Governor. My name is Musa Okotari. My question is, with inflation rising to 15.69% in April 2026, with the global oil price pressures linked to the crisis in the Middle East, with what we are seeing in the Strait of Hormuz tensions. What steps is the CBN taking to contain the imported inflation and stabilize prices?
Thank you very much. Well, let me just say that so far, I think it's important to, first of all, remember where we are coming from. And these are some of the things I tried that was highlighted in the communique. And basically, we've got to remember that we've been coming from 11 straight months of disinflation. And we believe that what we have now is something that has resulted from external shocks. But that notwithstanding, we have been able to create buffers that have protected us during this period. And of course, the Standard & Poor's upgrade is further testimony of the fact that we are clearly adopting policies that are taking us in the right direction. So the answer to that clearly is that we will continue in that path. We will sustain the course. We've seen that as a result of adopting the right policies, we have consistently been on a path of disinflation. This, we believe, is temporary, and in due course, we should go back to the period that we had embarked upon, largely due to the tools that we had adopted. So we will continue in that light. In addition to that, of course, it is key that the central piece of our toolkit being ensuring that our foreign exchange rate remains stable, that it remains stable. And it's something that we are committed to ensure that collaboration is strengthened and potential pass-through is minimized. Thank you.
Good afternoon, Mr. Governor. Good afternoon, members of the management team. Sarah Achibu, Channels TV. You just had an addition to the family in the person of Mr. Lani Onibuda, who has been contributing to MPC celebration. Just to know how that transition will strengthen the bank's capacity to navigate.
Thank you very much. You're right. Mr. Yuguda has joined us recently, and For those of you who have been covering the MPC activities over the recent past, he is no new face to anybody because he has been with us on the MPC for the past years since this administration started. So you are all very familiar with him, and I can confirm that the deliberations and his contributions to previous MPC meetings have been extremely thoughtful and very deep. In addition to that, of course, he brings with him over 32 years of experience working with the Central Bank of Nigeria. So though I say that those of you in this room 2.5 years, a very familiar face, I think those who are outside have known an even more familiar face for the past 32 years. So that's the combination of those two is really quite strong. In addition to which, for those of you who may know, at one point in time when he did leave the bank, he was the Director General of SEC. And we're pleased to have him here because we believe that the combination of, especially at a time like this, when Nigeria is transiting to a firmer and more robust financial ecosystem, where sitting from the perspective of SEC also does give a perspective of the whole financial system. So that's also very important to mention. So he brings experience that he's gotten from a different lens, but looking at the same business and industry that we look at. So the combination of all those, I believe, is adding great value to the Central Bank of Nigeria.
Good afternoon, Mr. Governor, members of the MPC. I am Nduka Changing of the Nation newspaper. Mr. Governor, the successful completion of the recent recapitalization program, which was also commended by the IMF, appears to have ended speculations about bank failures and is expected to strengthen resilience, lending capacity, and risk management. Mr. Governor, I would like to know the status of the banks yet to meet the threshold. Thank you very much.
Thank you for that question. And this was a question that also came up at the annual meetings in Washington, D.C. And really, my response then, which is not different from today, is to say that we need to also take credit for the distance that we have traveled in getting to where we are. And if you notice, much of what has come out of the banking recapitalization exercise, which saw the emergence of 33 banks meeting that requirement, is one that shows the resilience of Nigeria, investors, the belief that investors have in our economy, and given the fact that the ratio was, I think domestically, was about 74% to 26% or thereabouts. So that also shows a great interest in investing in Nigeria. And I think that is something that Nigerians should be very proud of. They should be very, very proud of it. And of course, what you've seen is that the recapitalization exercise has gone on relatively seamlessly. Relatively seamlessly. The banks you talk about are banks that have been subjected to various forms of legal, regulatory, and judicial issues. And they are ones that, in the fullness of time, will be in a position to move forward on that recapitalization trajectory. Bear in mind also that there was at a particular point in time when the central bank had cause to intervene, some of the time that they would have had, similar to what the other banks had, was taken away from them. So it would be unfair to compare them in terms of timing to what the other banks have been able to do within that limited time that we gave them. However, we are fully on top of all of the banks that are still on that road of travel. And there's business continuing as usual. And we support all the efforts that they are making towards getting over the regulatory and legal impediments in their way.
Good afternoon, Mr. Governor. My question is that the CBN has kept a high benchmark interest rate to stabilize the naira and stop inflation expectations. However, this has.
Thank you very
My
much.
name is Elizabeth Christopher, Voice of Nigeria.
Voice of Nigeria, okay. Thank you. Voice of Nigeria, we've heard your voice. So. And the SME. Yes. And that is it's a fair ask. It's a fair ask. Now, let me first and foremost say that the effort to direct more credit in the SME sector is not one that is the exclusive preserve of the central bank. It isn't. It's not an exclusive preserve of the central bank. It is something that is done in collaboration with different arms of government. And that's why you have the Ministry of Industry, Trade and Investment, you have BOI, and you have the fiscal interventions from time to time in certain sectors that they believe are necessary to ensure that those who need to be given the impetus, and in some cases, really protection, are done so. In the case of central bank, as increasingly we see ourselves as a catalyst, and we use our convening power, and we use some of the tools at our disposal to ensure that we make it more palatable for those who previously may have shied away from dealing with SMEs to want to be encouraged to do so. So that's where we come from. And I'm very pleased to say that from what we've seen of recent, from the numbers we've been looking at of recent, we see that new credits, and I emphasize new credits, that the volume of new credits are going to the SME sector have increased. They have increased. And now they can be attributed to various things. It can be attributed to various things, not least of which is the fact that many of the commercial banks now, perhaps, and I cannot speak for them, but perhaps they are recalibrating and looking at the future and seeing how to diversify their lending base. There's that. There are some who may be feeling that there's a cause to pause with respect to some of the large tickets and look at the SMEs and seeing how they can expand. And then if that doesn't work, you escalate. We have a consumer protection department here that is also that they are being hard done by as a result of the system. Now, it is important to mention to you that because of the concerns we have had, a committee has been set up which involves, and it is led by our consumer department, and they meet experienced executives, which involves representatives from the various deposit money banks and the top 10 microfinance banks. They meet quarterly with the objective of looking at these issues and seeing how is the fact that banks, as a rule, send multiplicity of advices, alerts to their customers, multiplicity. And perhaps there's a way that some of these things can be consolidated so that the customer can, a whole slew of different advices going out, which create confusion for customers. So I think these are some of the issues that are being looked at. And hopefully they will, in the fullness of time, be able to come up with solutions. Again, work in progress. Then the other thing mentioning is the whole issue of market conduct. Market conduct, as you know, also has a particular unit which looks at market conduct and obviously conduct risk. And what do we mean by that? We want to ensure that continuously we are making reviews of the framework that the different deposit money banks use in managing a situation where action when due. So that whole framework of compliance and customer experience is also being looked at from a different angle. So there are two angles that the central bank has put at its disposal to ensure that we continue to manage what is obviously an ongoing process and minimize it considerably.
Thank you. I have a question from Lume of this daily station. And she said, Mr. Governor, sir, you have referenced the stability of foreign exchange market as a key element in the fight against inflation and has renewed investor confidence in the economy. We've also noticed a decline in the reserves in recent weeks, and it is rumored that the CBN has been intervening in the market aggressively to ensure stability of the naira. Is this true?
Thank you. The answer is that it's not true. And again, I think a lot of this rests in legacy. And I will not stop saying it until people realize that the foreign exchange system has changed considerably. It has changed considerably. You know, when this administration took over, you roughly had foreign exchange turnover on a daily basis of about 100 million US. As at today, it's roughly about 550 million US, roughly. And at times it has spiked as high as $1 billion on a daily basis. Not every day, but it has spiked. Now, the goal is for it to get to that $1 billion every day, and it will get there. It definitely will get there. With some of the reforms that are being taken, with some of the things that you will see in the FX manual, we are confident that as time goes along, we will get to that level. Now, where you have already a deepening foreign exchange market where liquidity rules the day, there's very little need for you to intervene. The market operates all on its own, so there's little need to intervene. In actual fact, relative to turnover in 2025, relative to the turnover in 2025, the CBN intervened in about 1.2, 1.3%. It was so small relative to turnover. It was so small. So we've gotten to that stage where the market itself, due to the reforms that has been taking place, has been able to find its own level through willing buyer, willing seller, proper behavior with respect to market conduct, transparency, with everybody feeling that there's more or less symmetry in terms of access to information, nothing is being hidden. That is what makes a market. That is what makes a market. And that is what makes a market function. And as we go along the way, as and when we need to add other instruments or tweak policy to make it even more functional, we will do so. We will not hesitate to do so. So, to answer your question, no. What we have done, and which is normal, is that in the course of daily activities, there may be need to meet of the requirements of various arms of government or loans outstanding, obligations due. They have to be paid, and so they are paid. But believe me, as they are paid, so does new money come in. In actual fact, where we are today, and that's why I don't want people to lose too much sleep over looking at our reserves every day. I mean, you are free to do so if you want to. I won't stop you from doing it. But you'll see that it is so dynamic that we are literally back in numbers to where we are prior to the Iran war. We are literally back there again. So, and I believe that it will continue to be improving in that particular direction. So on the issue of reserves, that really and truly is what it is today.
Thank you, Mr. Governor. This brings us to the end of this press briefing. Thank you all for coming, and see you in July.
You know what?